Some new news just out earlier this morning. The Federal Trade Commission and the Justice Department together releasing new merger guidance. The agencies saying they want to clarify their more aggressive approach to antitrust enforcement of corporate consolidation. Under the new guidelines, the FTC and DOJ will use 13 criteria, they say, to evaluate both so-called horizontal mergers, in which companies in the same industry merge, and then vertical mergers, in which the same supply chains merge. I just did vertical and horizontal. I don't know if I went the right direction. Yeah. Those criteria include these principles, and I think for a lot of folks in corporate America, this is going to be significant. Mergers should not significantly increase concentration in highly concentrated markets. That's not new, but here's some that may seem that way. Eliminating substantial competition between firms, increasing the risk of coordination, eliminating a potential entrant in a concentrated market, and substantially lessening competition by creating a firm that controls products or services that its rivals may use to compete. The new language is an update to guidance for 2020 for vertical mergers and from 2010 for horizontal mergers. And we're going to have both the FTC chair, Lena Khan, and antitrust assistant AG Jonathan Cantor. Both of them are going to join us at 8:30 a.m. Eastern Time in a very important conversation about what this all means. It should be said, this is a document that's put out for comment. It's not official, and it's not the law. It's really a way of anchoring, almost, you could even, some might describe it a political document. Administrations, the Trump administration, 2020 put one out. This started in 1968. There was a new version put out in 1982. What it does, and this document has evolved over the years, and when I said an anchoring technique, in a way, it sort of anchors this group to this view of the world, and then if another administration comes along... This
is just their impression, or this regulator's impression of what they think the law is and how they're going to go about trying to enforce it.
Right.
Look, last week they lost a couple of major battles in court. Right. The FTC did in their battle to try and say that Microsoft couldn't take over Activision Blizzard. Does this document in any way recognize that, or is this kind of like, hey, full speed ahead?
I don't think this changes.
No, I just mean approach. They didn't take any. It didn't take any wind out of their sails to lose those cases in court. Is this pretty strident?
It seems like it hasn't. I mean, this seems specifically targeted around technology and platform companies, which is something that antitrust historically has not found ways to work with, or at least the traditional ways have not been the way this administration's wanted to approach it. I'm not sure how far. I think they look and say, look at the airline deal that didn't happen. I mean, I think they look at a number of deals that did get blocked and say that's success. And then they'll look at some of the others and say that's not success. And I think that's how they're looking at this probably in a way that perhaps some of the people in the business community may not be.
Yeah, I would say on the one hand, it may be useful as a tool for companies to kind of figure out what regulators are thinking. On the other hand, it's probably so restrictive that they're not going to appreciate it anyway, the business community, when it comes down to it. Well,
the question is whether it helps. To me, there's two impacts. One is, if you're a company, do you look at this and does it change your behavior? Do you say, you know what, I'm actually going to challenge this?
Yeah.
I don't care what they say. I don't think it's right. That could be one approach. The other thing is, does it change the conversation in the same way that, Elizabeth Warren changed the conversation around taxes and wealth and all of these things? We might not have a wealth tax today, but boy, did it change the conversation over time. And in a way, that's what sometimes documents like this do, both on the left and the right, depending on how they sort of, as I say, anchor sort of how they educate judges, how it educates lawyers, how it sort of, again, changes that conversation.
Makes companies think about what they're about to do. Would it pass this legal test?
In a different way.
Even if you can win in the courts, you're going to be challenged by the regulators, and does that change?
That's a deterrent unto itself.
By the way, yesterday, I don't know if you heard, James Gorman at Morgan Stanley said he thinks we have bottomed out in the IPO market, or in the M&A market.
Right.
That is going to be something that improves maybe the second half of this year, if not definitely by next year. I wonder if this part of the conversation puts another chill back on that market and makes companies think, well, maybe not so fast.
I don't know. I mean, look, I was talking to a bunch of CEOs recently who were talking about this decision, and the decision being the FTC loss related to Microsoft's Activision. Does that give you some kind of renewed confidence or mojo to go do a deal? I don't know. I mean, I think there's an emotional element to it. But I think there's also a recognition you're likely going to court if you're going to be doing a big deal like that.
And it's going to take a lot longer than you think, and it's going to be...
It's going to cost a lot more.
It's going to cost more, and it's going to cost more in terms of focus of your executives. That this is what they're going to have to deal with. And that in itself might be a deterrent, too.